Welcome back, everyone. So here's the deal. Realty Income, ticker symbol O, has been getting crushed. It's currently trading right around its 52-week low, and it's looking more like the Realty Income of 2015. Now, this is a company with a strong business model, and they reward investors with a monthly dividend. So how could such a popular REIT be getting hit so hard? And is it time to buy, hold, or sell? I'll provide my answer next, so stick around. Alright, so it's time for the portfolio update. We're currently sitting at 837, and I feel like at this point everybody knows that we're adding $10 a day, but the current value isn't increasing by $10 a day, and that's because our return has been in the red for a while. We're currently at negative 7.7. Now these are our current holdings, and as you can tell, a lot of them are in the red as well. And I will absolutely continue to keep buying all of these stocks at a discount. Let's move on to the quote of the day. The quote of the day reads, "You must get good at one of two things, planting in the spring or begging in the fall." You must get good at one of two things, planting in the spring or begging in the fall. Now, this is one of my favorite quotes of the day so far because I feel like it really pertains to Realty Income. So let's take a deeper look into Realty Income and see what they do. Now, what they do is they own and they manage a portfolio of commercial properties. So it says here they have over 13,000 commercial properties, and they're all under long-term net lease agreements. Now, what that means is that it's being leased out on a triple net basis. So Realty Income doesn't have to worry about the insurance, the taxes, and the maintenance once they lease it out to their client. And now 99% of their portfolio, of their holdings, are being leased out currently. These are great numbers, guys, and let's go over and see who's leasing them out. They have convenience stores, grocery stores, dollar stores, home improvement. These are all of the types of companies that are leasing from Realty Income Corp. So for the lack of a better term, these are kind of recession-proof companies. So I like the way that they're structured and they're set up and who they're leasing to. Now let's go over to Seeking Alpha and look at their financials. Here we are at Seeking Alpha, and the first thing that stands out to me, it's not only the current price at 49, just changed 49.52, but it's that they're at the bottom end of their 52-week range. Their year-to-date is negative 22.38, but I want to show you something that's interesting. Simon Property, another REIT, is down 11.15 year-to-date, and Vici is down 11.06 year-to-date. So it brings me back into the bigger picture that that Realty Income is not really totally in the fire, but I think that this is a fire sale, okay? And we go back to the quote of the day here where, if you don't plant in the spring, then, you're not going to reap the benefits in the fall. I think that's one of these cases here. I think that we're really getting a great price here on a great company. So Realty Income, their forward dividend yield is 6.28%. And if we go over to their financials, what really impresses me is their total revenues. All they've done is increase their total revenues, okay? We go down to their net income. All they've done since 2020, they had that big boom. All they've done is increase their net income, okay? So we go over to their dividends. Seeking Alpha seems to think that their dividend is safe. I go over to their cash flow. I think their dividend is safe. Their dividend history, what have they done? All they've done is pay it out. They've increased it for 25 consecutive years. So what I like to do on this channel, a lot of the time I go to this chart here. This is exactly what you're looking for right here. You want this. And they pay this monthly, guys. So I don't see why there's a lot of people out there saying that they're concerned about Realty Income when all they've done is be successful. So if I go over and I look at other companies that have been successful, like Raytheon here, they're down 30% year to date, right? The past year alone, they're down 18%. Okay, that's another good company. Let's go over and look at Bank of America year to date. This is a company too, by the way, that a lot of people, a lot of big name investors have started investing in or up the ante on them. Year to date, they're down 22.77%. So I'm really not all that concerned when I go over here and I look at Realty Income by their 52-week range. All I see is a big fire sale here, okay? And for younger investors, this would be a great time to buy, right? We look at this 10-year here. This is a great time to buy, okay? Because I said in the intro, it's looking more like a 2015. If we're over here looking at, July, August of 2015, the price was right around 45, 48, and now it's kind of made that market correction where it's back down to not where it should be. I think it's a little bit lower than where it should be, but it's still back down to a buyable price, and you're going to get great capital gains on this, okay? So for younger viewers, it's a great time to buy. For older viewers, especially ones who have not yet bought into Realty Income Corp, I would think if you have, a year and a half to wait and see and sit it out and consistently invest in Realty Income Corp, you'd see great returns. But if you're an older viewer who is already invested in Realty Income, and if you look here, you've lost a good amount. So over the past year, you've lost just about 16%. I think the best thing to do isn't to offload everything, but the best thing to do is to do what I just said, is wait a couple of quarters, see what it looks like. Why is Realty Income getting hit? Well, they're getting hit because of all of the rates that are being hiked. So obviously a real estate company is going to get hit with hikes. Okay, the rates significantly affect them because they run a lot of the time on debt. Okay, so I think this is an absolute fantastic time to buy Realty Income. And if you don't, like the quote of the day said, you're gonna miss out on it because you didn't plant now, and 6 months from now, which I don't even think it's gonna be 6 months from now, guys. I think it's gonna end up being more like probably a year and a half until you really get the benefits. So let's say first quarter of 2025 until you really get the benefits of this. But I think that this is absolutely a buy, and I'm looking into buying it myself. So thanks for watching, guys.